Hi everyone, Linda from Let's Talk Prepping, and this is from Yahoo Finance. Prices don't drop when inflation eases, why your wallet will be hurting for a while. And I wanted to bring you something from some mainstream media because people mention in the comments, oh, you're just looking at the alternative news. Well, this is mainstream by Medora Lee, and it was in USA Today, so that's very mainstream. Tuesday, July 5th, 2022. And it's very interesting because it's just going to show you why you should be prepping now. It'll be like money in the bank. When it comes to prices during inflation, what goes up doesn't always come down. It's important to remember that inflation is a rate that measures how fast prices are rising. If the consumer inflation rate drops from its 40-year high of 8.6% in May, prices are still rising, just not as fast. Consumers won't feel immediate relief even as the inflation rate slows because many of those elevated prices are likely to stay, says Michael Ashton, managing principal at Enduring Investments in Morristown, New Jersey. Now, this is important. The price level has permanently changed, said Ashton. Until your wages catch up to inflation, it will continue to hurt. So the price level, that's kind of what we've all kind of figured all along, that once prices go up, they very seldom go back down. And wages have a long way to climb to catch up. In May, inflation-adjusted average hourly earnings decreased a seasonally adjusted 3% from a year ago. When combined with a decrease in weekly hours worked, that resulted in a 3.9% decrease in real wages. So when you think about that, your wages are going down while inflation's going up. Interesting. Inflation on used cars has dropped. Will they be cheaper next year? Probably not. It says the inflation on used cars has fallen significantly. And at one point, it was over 40%, but now it's dropped to 20%. But that doesn't mean the price of a used car has fallen a lot. Used car year-on-year inflation is going to continue to fall over the balance of the year. Used car prices are not, Ashton said. The best we can hope for is they only go up 2%. So even as inflation is going down, he's saying that used car prices are going up. And here's, if you go to this article, you can see another article, another record month for inflation, new levels driven by gas, grocery prices, and high rent. And he says, so you may as well consider buying that used car now if you were hoping for a price drop. But why do gas prices drop? Prices of items like gas and food can be volatile due to outside factors, such as the war, and that the Federal Reserve can't control. So the Fed tends to exclude food and energy prices and instead concentrate on core inflation, said Nick Rusinoff, a Wharton finance professor. Core inflation includes things like rent, furniture, clothing, and other goods and services. Once core prices go up, generally they don't come down. I'm going to highlight that for you. Once core prices go up, generally they don't come down, Rusinoff said. In the last 40 to 50 years, we've never seen deflation in core goods. That's interesting. In 40 to 50 years, they haven't seen deflation in core goods. Most durable goods and services don't really come down in price. And let me take a break from the article here to tell you that means you should be buying as much as you can now because it's going to be like money in the bank. Instead of having to pay more and more for these goods, you at least get them at today's price. And they go on to say, and much wage growth could take a very long time. What the Fed does is meaningful, says Chris Campbell, Kroll chief strategist and former assistant secretary of the Treasury for financial institutions. As prices continue to rise, budgets are eroded. If prices don't get under control, this could be significant for the consumer forever. Why will prices keep rising? Businesses are struggling with inflation and need to pass on some of their costs. Even though supply chains have almost disappeared from headlines, businesses are still experiencing disruptions as well as labor shortages among strong demand, said Holly Wade, executive director at the National Federation of Independent Businesses. Over the next 3 months, a record high level of business owners said they are planning to raise prices, she noted. Even with a slowdown in consumer spending, I don't anticipate price cutting among small business owners, just a slowdown in the rate of increase, Wade said. Gas prices are a large part of the inflation picture for small business owners, and it's unlikely that prices there will decline significantly anytime soon. National average for a gallon of regular unleaded gas was last at $4.85.7, down from a record high of $5 in June. However, most analysts expect the recent decline to be temporary as oil and gas supplies and refinery capacities remain limited. Additionally, modest, predictable inflation is seen as a sign of a growing economy. It incentivizes people to spend money now rather than waiting, allows wages to increase either in line or above inflation to boost the standard of living and make it easier for businesses to plan, according to the Federal Reserve and IMF. What if prices dropped? Is that bad? Yes, although people think they want to see price drops significantly, that would actually be a sign of extremely weak economy with a plunge in productivity. Negative inflation or deflation would likely lead to a significant rise in joblessness and wage cuts and signify a deep recession, which no one wants. Economists may expect a significant slowdown in the U.S. economy or even a recession, but they generally don't expect the economy to sink into a deflationary period in this cycle. Is there any good news? Yep. Wages are running faster than the median inflation right now. So if gas and food just stop going up, in a couple of years, people will catch up. Do you hear that? In a couple of years. Can you wait a couple of years to catch up? Um, I know it would be very hard for me to wait a couple of years to catch up. I'm on a fixed income, so if things keep going up, I'm in as much trouble as most of you out there. So it says, they could catch up in a couple years, assuming, of course, that they are getting those wage increases even when they can't point to the consumer price index at 8%. So this is basically the article, and this Medora Lee is a money markets and personal finance reporter at USA Today, and she quotes a lot of people who will be in the know, not just people like, say, me and some of the other preppers who are just saying, we think this is going to happen. These people should have more insight into it than I do. So what does this mean for you? It means that if it's going to take a couple of years just to break even in terms of inflation, maybe now is the time that you should get ready, because it might even take more than a couple of years. You just never know. So my advice now is just to prep, and to prep as much as you can, as often as you can. Don't go into debt, but try to get whatever you need and try to foresee the future, what you might need that is going to go up in price in the future in the next couple of years. And if you can, purchase it now. So thanks for watching. Please comment below and please subscribe if you haven't subscribed already.